Hey guys, what's going on? This is once more Pietro Terzano, today creating video content for Savius LLC. Before we get started, let me state once more that I'm not a financial advisor, so whatever I say here is for purely didactic purposes. So I hope this triggers some discussion and provides you with some idea to go and research some techniques and study more trading, because it's really fun. So please do your own research and take your own investment and trading decisions. So what I would like to discuss with you today is a very controversial topic, which is corrections and reversals, in particular reversals, which is for what I've seen in my years in Savius is the most one of the most common mistakes young traders do. Try to pick up in a trend, try to pick up when the market swings actually, so when it goes after a certain movement, it reverses in the opposite direction. And that is a very difficult pattern. It's much harder to trade a reversal than to trade a continuation pattern. So the difference, what is the difference? A reversal continuation pattern, it means that the market suppose is trading down, and what you do here, for example, you have established a new low, and a continuation pattern will be that basically you try to trade in the direction of the trend, the macro trend, which is down. You just want to continue to re-enter in the direction of the trend, right? While when you trade a reversal, you have still your macro trend down, and we establish a new low, and for some reason you think this is going to be the lowest low, and so you want to try and pick up a reversal pattern so that you get the next swing. It could be in this direction, so in the upward direction. So but what are the most common reversal pattern? There are a few. One is the typical reversal pattern is a classic reversal bar. If you take a look at those sort of open and low close bars, you have the same pattern according to whatever type of bar you're using. But suppose that again we use a downward trend as an example, and what will happen, you will have the bar will open, then it will go down and create a new lowest low, right? And then it will reverse back up, the price will reverse back up and close in the upper half, or better in the upper third of the bar, so something like that. So this bar is typically a reversal bar, and that normally means that here, above here, some people will try to enter and look for a breakout of the bar to say, okay, here the price has somehow rejected the level, and potentially here we're going back up, okay? But of course, not always is that easy, because the price could be going back up and then down again. And so what happens when we test again this level? It means that all those that like to trade the so-called continuation pattern traders, these guys will be re-entering in the direction of the trend of the breakout of this bar. So if we break this low, most will say, okay, we're going for another move down, and I'm going to enter with a breakout. But it's not always so easy. So sometimes we do break through this level. So we open, we break through this level, we go back up, and again we close above this level. So again, when we break through this again will be a reversal pattern. In this case, we have a so-called double bottom, yeah, because we made a low here, lower low, and then again we retested this level, and then we reverse. So there are a few patterns which are sort of famous and typical: the head and shoulder, double or triple lows. But you got the concept. Basically, when we touch a minimum, so the W also, which is called like this, is made like this. So suppose this is the new low. Here we have our reversal bars. Okay, so we made a low, we go it up, correct, it went down, and then again we had a low. So sometimes instead of making a breakout of this, what people will say, okay, when I break this sort of the center of this figure, I will enter, means that this is confirmed and we're going back up. So this is a typical concept. So we have we have seen a bunch of reversal patterns. But how do I pick up those levels? How do I say one is a good reversal? Because that's the thing. It's not to me important the shape of the pattern of the reversal. Of course, the volumetric side of it will be important. What went on in this particular bar volume-wise? A lot of volume went through. There was an exhaustion of volume towards the end of the bar. So we started with a lot of volume, then sellers got exhausted as we went down. The volume bar, was it a small volume bar or a big volume bar? Yeah. So there are a few things that you can examine, but for me the most important of all is not when, is not how, is where. Where does this reversal pattern happens? So what do I mean by that? I start my day when I do technical analysis. We're not gonna, do it now. Also because in my current job I use technical analysis. Chart analysis is really the last bit of all the analysis. Is much more macro. But when I tend to do a lot of analysis. It takes me about 20 minutes per chart. So what I do, I go through various time frames. I go through various charts, and I try to look at what I call confluence points. So I want to see a level at which a few things tend to coincide. Volume support, fib retracements, trend lines, support and resistance, meaningful levels, meaningful historical levels, a few things. So when you do that, what happens is that you will find yourself with some areas, some price areas, where you find yourself that when the market approaches those areas, those levels, already that here in this peculiar price area there is a series of technical support and resistances, and there you think that something could happen. So if I see a reversal here, this could be a good one, a one that makes sense trading. At the same time, when I trade a reversal, I want to make sure that I don't know in advance if whatever trade I entered in is a reversal or is a correction. So I start by the concept that whatever I do most likely is a correction, right? So I trade it like a correction. What do I mean by that? So suppose I entered in this reversal, on this reversal pattern. I got my long here and my initial stop here. After my first move, when I got at least once or one time and a half my initial risk, I try to reduce my risk, because I know that after the initial move, most likely I will have what? A move in the direction of the trend. Suppose, of course, we are coming from a downwards move, and then we reach the level, and we couldn't go through, so we tried the reversal. We entered long here and we started going up. What happens? Those who believe in the downward trend at a certain point will try to reestablish the trend, to push the market down and to break this low. So this is basically a profit taking of those who were in the short trend. So those who were in the short trend, when they see this reversal bar, will probably stop here and take some profit just in case this is the lowest low. Also because we know here there are a bunch of technical support and resistances. So we go above here and trigger some buying interest, which leads my price up. But again, this could be just a small move and then return the direction of the trend. So here I want to be conservative and flip out some of my size. At a certain point, I know I can expect another move in the direction of the trend. And so here three things could happen. Three things could happen here when we start moving down. Hypothesis number one, we go down and we break through my level. We break to the lowest low. My stop is probably somewhere here. So we break through and we continue the macro trend, which is bearish. Okay. Hypothesis number two, we break through this level, right? We make a new low, but then what happens? By magic, we rebound back up. So we create a double bottom, and again it's a reversal figure, so I know that when we break this, we're again going to try and go up. Then of course it could happen that we have a sort of a big continuation pattern when the price remains trapped here for a while and rebounds till we finally break up. But you know, most of the times when we, after a double bottom, you will have some sort of a push. So this is hypothesis scenario number 2. Okay, so double bottom and we go back up. Scenario number 3, which is according to myself the most common, we go down somehow, we stop before this, and we try and continue our correction up. So what will happen is that when we break this swing point over here, yeah, this will trigger some more buying interest, because those who do trend re-entry will have somehow re-entered short here. You will have sort of a reversal downwards bar here. So you will have a bar which opened, went up, broke probably through this swing point, reversed back down and closed here. So below here, those who use trend continuation patterns will re-enter short. When this move does not make a new low here, they start to be worried. Say, uh-oh, maybe we are reversing. So when we break through here, we're gonna have another push. When we break through here, basically what do I do in this precise point? I add back on my position. So in the first move, I flip something out, then I wait for it to reverse and see if I get my stop here or not. Because if I do, I'm stopped, but my stop is small because I flipped something out here. If they do scenario number 2, a double bottom, I'll go long again. If instead we stop here and we go back here, what do I do? Here, I'll add on my position, so that if this is actually something that is going to move, I'll go there with big side, you know, the anti-martingale concept. But at the same time, I want to reduce my risk. I don't want this big risk. I don't want my risk to be this or soldoni. I don't want my risk to be this big, yeah? I don't want all this in risk. So what do? I move my stop here. So my stop from here, it goes down here to the next swing point or fractal, right? So what do I do is typically after a big move, and when we start to do this correction on the upway, I found I studied a few traders and many tend to coincide that basically this sort of correction patterns that many call ABC, they tend to be symmetrical. So okay, suppose this is A, B, and C. So the A and C leg, they tend to be symmetrical. C leg tend to be same size of A, or between 1 and 1.271% of this leg. This means that I know roughly what to expect on my C leg, right? So I use Fibonacci extension, so I measure this leg, and then I project the leg A from the bottom of the B leg, and I try to understand where this can go, if this is a typical correction. And then of course I try to look for hints if here, around this area, there is some sort of resistance level coming from, I don't know, a Fibonacci retracement of this move, some sort of volume or other levels retracement, etc. But of course, this can be wrong. So we might very well not be in the case where this is an ABC, and this can instead be a 1, 2, 3, like Joe Ross used to say. So this is actually a reversal pattern. So maybe from here, you know, it's become a roofer, then we go back to the sky. We don't know yet. It's very difficult for us to know in advance. So I use, of course, I have a few techniques of trailing my price, and so that I try to stay in this trend as much as possible in case this becomes, you know, a real reversal. I just picked up really the bottom of the market, which normally after a big swing, so I do have a so-called V-shaped reversal. Okay, so guys, coming back to what we were saying before, I prepared a couple of charts for you to look at, and I want to be able to show this on the chart. Okay, first of all, what do? We consider if this reversal comes after a big move down. So in this case, we started from one 23 on the euros, and then now as the interest rates in the US keeps going up to fight inflation, the US dollar is getting strength against the other currencies and versus the euro, so we are getting now to a low of 0.95. So if we just place a line here and we try to go back in time, hold on, let me use a broader, okay. If we try to go back in time, when was the last time I sort of touched these sort of levels? Right. I'm using investing.com, which I like in a way because it's a free tool. There is a free charting. There are plenty of tools available for analysis. It's very easy to use. So, if you want to play around, it's something good that you can do without even getting to a platform. So last time that we were at this level or lower, it was like 20 years ago. So it's a sort of an historical level, and it comes after a big drop. This level was broken here, was a fractal, a swing point broken that then triggered a very high move on the high side. So if we have a reversal pattern here of some sort, and we did, it's a sort of a good point to try eventually a reversal pattern, okay? And we did sort of have this sort of reaction. So we touched the 0.95, and we had a reversal bar. But how do I know this is a correction or a reversal? I don't know. There's no way for me to know. So what I do is of course I try to use whatever I said before. So I take this previous swing point, I have drew my Fib retracing levels, classic Fibonacci retracement. You have the tools here on your left. So this is a 0.618% and 0.55%, the so-called golden ratio, and we have this red lines dot here. Then what I did, I just let me take this down. What did I do? I just measured this leg, and then I projected this from here. So I expect an ABC pattern. Okay, so where do I expect this to end? In this, where these two, let's say that yellow is not the good color for this. Hold on. Let me change the color to black so it will be easier to see. Okay, and let me clean a bit the chart. So what did I do? I measured this first bit here, which we could presume is the A leg. This is the first correction, the B leg, and this is what we expect to happen, the C part. Where will this end? Will it end here or will it go more? We don't know yet, right? So I treat every reversal as a potential correction. But as corrections are symmetric, I expect this leg, the leg C, to be about the same as leg A. So once I measure this, I want to project it from here. So within one time or 1.27 times this size, I expect this correction to end, if it is a correction. And as I have a few other, support and resistances in this area, if this starts to go up, then this is where I expect this to end. So on my long, we're going to stop here to monitor closely if this could end here, and eventually, if I see a reversal, I can also try improve a trend continuation pattern, which will mean going down. We see in this example on the euro dollar. So if this is going to turn into an ABC, actually they give you the pattern, amazing. If this turns to be an ABC, I expect the price to going to reach again, the sort of parity level, maybe a bit above that, and then we'll see what happens. It's going to be a big reversal pattern, so we are actually going for a macro trend, a big reversal back up, or if we stop around this area, and or if we stop around here in this we call it, sort of a confluence zone of price and levels. If we stop here, then possibly we might be trying to go back in the direction of the trend. I don't know yet. To be honest, I'm not into euro dollar as a pure speculative trade. I trade it as sort of internal balance, portfolio balance. So I need to keep my sort of treasury trade. So we need to keep our money distributed in the right size between euro and dollar. So when I saw we broke through this, I said, okay, let's wait a bit, and around here I'll decide what to do. Okay, now let's switch to another title, another example. This is a stock that I'm actually trading. We are in a sort of we can call it a secular downward trend, in the sense that is a stock that was let me put it on a weekly chart. So it's something that was 195, and it been through the years going down. Even 2020 it went down. It's a BF Pharma. I don't want to go too much into details. You just don't care. It's just an example of a chart of a charting technique. So nothing major about this particular stock. Okay. So again, what have we done here? We have reached. Let's try to focus a bit more here, so we can take a look at what went through. I don't know if you remember when we discussed double bottom, right? We discussed double bottom. Now, take a look at what happened on this bar over here and this bar over here. So basically, we had 1, 2, 3 bars where we sort of tested this level and we rebounded of it and closed on the upper side. Then that triggered, a reversal pattern. So we had 1 reversal trial, 2, and that would have created a sort of a W figure, right? Yes, I guess you can see it here. Yeah. So when we saw this possibly breaking this sort of a neckline would have triggered an upward move, and it did. So actually in this case we actually tested the level even more because we had another try in this time. So imagine if you tried this reversal, you could have been wrong 2 times, once, twice, then again got broken, and then finally after this bar, that's the third reversal, you would have probably entered long here, but with a higher risk, but at the same time your reward would have been much higher, right? But in the case, suppose you went long even here, you're not on these 3 other chances and you got stopped. Suppose that, let's try again. Let's make an exercise. So we tried this reversal, went up a bit, then we stopped, we took something out and we got stopped here, right? Negative, but small negative. Then what happens? We try the reversal number 2, here, go long here, our stop goes here, we make about once our initial risk, and well, in this case it doesn't happen because we go down, we go stop full risk, okay? So you get stopped twice. Third time, reversal part, right? We go long here, our stop goes here, then we start getting some profit around here, right? And then we chase it, we follow, and then what happens? Market goes down here, so we go down, but we go down with smaller size, right? So, and we don't get stopped because, here our stop doesn't move till we have created a new fractal, a new swing point, which is here. So once this is over and then the trend resumes, then in this case our stop moves here. So it's not that we can really add that much to this position. Why? Because finally the risk is still too big. It's almost a double bottom. So when we create a new swing point, when we break here, we're gonna add to the position. and we have it a bit more, but not that much. So at the same time, how do we look at this on a broader way to try and think after this big move how much it can go, right? How much can this go? So we tried to draw our fib retracement here, and we got the value 61, 78, the 50% retracement. We got 3 levels here, and then of course we do the same exercise of style. So let me get the fib extension tool. So we go here, we take this A leg, and we project it from here, and you can see that I get exactly the same levels, right? So what am I doing here? I'm projecting the A leg. Sorry. I'm projecting the A leg. This is my A. This is my B of some sort. The counter. Then I don't need to label it. I don't care. I just know that this is my first reversal reaction, and then after I have a first push, I normally have a counter reaction. This is a profit-taking way, and this is guys who re-enter in the direction of the macro trend. With this you can do this. The macro trend, which is down. So the macro trend is down, I have a reaction up, profit taking, and then I try to re-enter. If this trend is actually lower, down, if it's actually done, it means that we stop somewhere around here. We don't make new lows. And from here, what happens? Automatically at a certain point we'll try to go back up, because people say, okay, if we cannot go down, if we don't make a new lows, and here we found the bottom, then it means that they go in the other direction. No, I just want to go in the other direction. So I want to go up and see what happens when we break through here. So doing this, I get this area of potential end of my move. Here I have some previous levels testing, etc. So if I were in this trade on the long side, which by the way I did that. This is a trade I'm actually doing, which I did not pick up in here. To be honest, I was on holiday. I entered, let's say, at the breakout, this breakout right here, around this like I think it was 460, something like that, 430, 460. So I'm long this stock. So what I'm gonna do, of course, around this area is a level where I was expecting the price to have some sort of negative reaction, and it did. And so you're gonna ask me, well, did you take profit? And my answer is no in this particular case. But the reason why I did not take profit is not linked to the chart. It's a more fundamental long-term view, and I expect after from a stock which was at 195, I expect a bit more. So I want to hold on to this and see what happens. I see we keep challenging this area, and the reason why I'm still a believer of this is because after this ABC correction was over and we started to move down again, basically we then reversed and made the new high here. So we are not really going towards a new low. We sort of at least staying in this area of price over here. We are still within this range, and I want to see what happens when we get out of here. But anyway, I believe you got the idea, the message of how I trade a reversal, and how you can get in that. Now the trick is, of course, when you get into a reversal, is to keep in mind that you don't know if that is a major reversal, so it's going to be a V shape or something that's really a game changer, or if it's going to be a simple correction. So you don't know if it's going to be, suppose something like this, like macro trend down, and then we're gonna do psh, 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 and that's it, or if it's going to be psh, 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 and then we break this and we actually go up and it's going to be a major move. You don't know. It's very difficult for you to know in advance. So play it like if it's a small move, be conservative, but find for yourself a good trailing technique that in case it's actually a macro move, you are in the move. You start to trail. The ability to squeeze your trade in your favor, to milk, as we say, I like to say milk, your ability to milk your trade in the best way possible, to get the best profit out of it. It will turn very, very useful through the years, trust me. But I made a video already about this. Okay, guys, thank you very much. That's it for today. Bye.